Bob, congratulations. Why the direct listing?
Well, you know, we looked at both. I think it was pretty close. We've got this big brand called iHeart. We spent time out with investors, with the analysts, and we felt we could get the attention we needed without having to sell stock today.
Now, it had been owned mostly by mutual funds, hedge funds, and so on. Is this also partially an exit for some of those investors?
You know, I can't speak for them. I think we've got a great company with a wonderful future ahead. We're the #1 audio company in America. You talked about earnings. Yes, we have earnings. We just announced, we had 2.5% up on revenue, 3.8 ex political, and you saw the operating leverage at play in terms of converting that to our adjusted EBITDA.
Now, there is, among the analyst community, a little bit of trepidation about radio advertising revenue. What could that reach in 2019 and beyond?
Well, what's great about us is not only do we play in the radio revenue bucket, and by the way, we outperformed the radio marketplace historically at about 200 basis points. This year, first quarter this year, we were over 300 basis points outperformance of that. But we also play in podcast. We're the #1 commercial podcaster. I think it was expected to be about 400 million this year, maybe doubling for next year. We're in digital with our streaming digital services. We're in events with sponsorship. And of course, we've got the whole new smart audio analytics and attribution tools, which allow us to play in the digital pool as well. Finally, of course, what you're finding is with the decline, I hate to say this, of TV, what you're finding with radio is it's been rock solid in terms of reach. It's now the big reach medium, and we're finding some people beginning to use us to pick up for that lost reach, and also to go after some of those light TV viewers, which is about 40% of the TV audience. So I think we're very well positioned with the multi-platforms. And by the way, being the reach leader in the U.S., we reach more people in the U.S. than even Google and Facebook do. So for us, that gives us, I think, a wonderful position to play in this advertising market. Definitely
a huge amount of raw material, and obviously you've offloaded the billboard business and so on, so you've done this major restructuring. You do still, however, have $5 billion of debt on the books, even as you try and grow all of these parts of the current business. How much can you spend? How much capital spending can you afford? And how much do you need?
Well, for us, we even in all of our models, we are nicely free cash flow positive. I mean, that's the beautiful thing about the structure of this company, is it throws off a lot of free cash flow, so we can delever pretty easily with our own cash flow. And indeed, the priority that Rich Bressler and I have in running the company is really we're focused on delevering the company, and that's going to be our priority, is to get that leverage down.
So how do you then go after growth at the same time? How do you put resources into, for example, your podcasting business, into live events, when you do have competitors focusing on each of those segments quite separately? You know, I'm thinking of Live Nation for live events, for example, Apple with so much cash that it can put into podcasting. Spotify has also bought a podcasting business recently.
Well, it's interesting. Apple's a wonderful partner. They're primarily a platform for distribution. We are the #1 commercial podcast publisher by a lot. We and NPR sort of are sitting at the top, and everybody else at a much lower level. So we're very comfortable with that. No, by the way, we built that before we came out of bankruptcy. So I think with a better capital structure, we got even better opportunities. And by the way, Spotify's not even in the top 10 in podcasting. So we don't really think they're much of a podcast publisher consideration.
You're known as a wonderful marketer, a wonderful leader of companies. What is your plan for keeping the younger audiences engaged, Bob?
Well, the good news is that if you look at radio, just our broadcast radio platform, which is one of our platforms but has this huge reach, is not only do we continue the reach for total adults, but actually when you look at millennials and Gen Z reaches almost 90% now, and that's about what it was in 1970 and even 2005. So the good news is that it's the teenagers are coming aboard radio. Remember, radio is not where you get your music. Radio is where you get your community. We're about companionship. We're your friends. And that is something that's probably more valuable than ever in a world of sort of an increasing fragmentation due to technology and the new social vehicles.